Today, we are going to look at budgeting and forecasting, and we're going to be using and reviewing our Excel skills because our budgeting template and our forecasting process rely on us being able to already use Excel really well. So you're best off doing this course when you're confident on using filters, moving between worksheets, applying formatting, and feeling confident with formula. Before we even start budgeting, we first of all need to understand that with a non-profit organisation, our reserves or our funds, whatever you call them within your organisation, are made up of different types of funds. So here I have a table summarising the key categories. I'm actually going to talk about restricted funds first. And restricted funds are maybe the easiest to understand. These are the monies that have been given to us by a donor which specifically relate to a project and can only be spent on that project. And that's why we do all our budgeting and we present the proposal to the donor and they fund that project, and we take those funds and we ring fence them and say, yes, these will only be spent on that project. So these are our restricted funds. And with an NGO, they make up the majority of our reserves and our transactions. Next, let's talk about unrestricted funds. So these are the funds that our organisation can spend freely on whatever we wish. Now, in reality, in a non-profit organisation, we often find that we need to spend these funds on salaries of staff that are not fully funded by projects. And mostly these are staff performing what we would see as support or overhead functions like management, finance, administration, fundraising, etc. And then the unrestricted funds can also be used for any unexpected expenses that may arise. Maybe we need to expand our office space and it's not budgeted in a project. We might have repairs. We might have some professional fees that need paying. We could also find that there's a project that we really want to undertake ourselves that isn't supported by any donor funds. We might want to fund that. And sometimes we need to use our unrestricted funds to co-finance or contribute towards donor funds. The third category I've included here are designated funds. And designated funds are funds that have accumulated through unrestricted monies, but then we've decided that we must put them aside for a specific purpose. So for example, if we realise that we absolutely need a new vehicle for the organisation because perhaps our old fleet of vehicles is becoming old and unsafe, we may say, actually, we are going to designate a proportion of that unrestricted funds only for expenditure on a vehicle. So that prescriptive use of our funds has not come from a donor or a contract, but for careful management of the organisation, it may be that we designate, usually through management minutes or a board decision, that we are going to ring fence some of the unrestricted funds for a specific purpose. Another example might be a medical fund to ensure that you've always got some funds set aside in the case of any medical emergencies for your staff. So unrestricted funds are incredibly important to our organisations. In a way, they're the funds we have to earn for ourselves. Obviously, we're earning donor funds through our work on proposals, etc. But unrestricted funds are not coming from a big donor, they're not coming direct. We have to earn them somehow through other fundraising activities. Unrestricted funds are also really important because they're kind of the bottom line of our organisational funds. Auditors and other stakeholders, they will look at our level of unrestricted funds to establish our financial strength. If we have no unrestricted funds, what it can mean for an organisation is that if there was some kind of emergency, or we overspent on a project and we needed to fund it, and suddenly we couldn't fulfill this financial obligation from our unrestricted funds, well, that would put our organisation in danger. So that's why we always need to ensure that we do have this buffer of unrestricted funds within a non-profit organisation. So when we budget, we need to do everything we can to protect and try and increase our unrestricted reserves. And so when we budget, we need to cover the full cost of delivering a project. So we often refer to the concept of full cost recovery. So what does it mean? Well, full cost recovery means securing funding for or recovering all of your costs relating to the delivery of the project. And when I say all of your costs, I mean all the infrastructure that is essential to deliver your project. So the essential infrastructure includes your admin staff, your finance staff, your country director, your logistics operations, the office that you're operating from, the training for your staff. All of these are absolutely essential in delivering effectively your project. And while donors are happy to fund direct activity costs, it can be these support and infrastructure costs that can be harder to recover. But we must endeavour to include a fair proportion of our overheads in our project budgets. I also note here that if you have a head office, you may also have to budget to try and recover some of the costs that will contribute towards head office costs, because likewise, your head office is an essential and critical part of the delivery of your project. Different donors ask us to budget in different ways, but at a very high level, generally, we're always going to be asked to include costs for salaries, activities, our overheads or support costs, audit costs, and hopefully an admin fee. So we'll look at these sections in more detail. So firstly, on salaries, make sure that the full cost of employment is included in your budget. And we could use something like a total salary calculator to make sure that we include all the component parts of a salary. So on salaries, we need to make sure that we include not just salaries, in fact, but the full cost of employment. And the full cost of employment includes much more than salaries. It also includes any payments that we're required to make through local legislation, maybe training commitments, pension commitments. Then we also have staff benefits that are dictated through our organisational policies, and these may be annual training allowances, contribution to professional subscriptions or exam entrance fees, medical allowances, travel allowances, potentially housing allowances. So it is the full package that it costs to employ an individual that needs to be included in our budget templates. Let's have a look at a very simple total salary calculator. So here in this example, we have our grades here. And if we were putting together a budget, we'd be able to estimate what kind of grade we thought the role would be in and pick out the salary total to go into the budget. And we can see here that the total is made up of the contracted salary, which is our base point. And in this example, at this organisation, we also have pension contributions, we have a medical allowance, travel allowance, we have an allocation of insurance premiums, we have an annual training allowance, professional subscriptions contribution, and that makes up the total cost of employment here. And it's that then will go into our budgets. In the salary section of our proposals and our budgets, we often split the staff into two categories. So first we have direct staff, and these are the staff that usually have a contract that is directly linked to the project. So they are recruited specifically for and contracted specifically for the project. And if it were not for the project being undertaken, they wouldn't be employed. And these type of staff tend to be charged 100% to the project. Another thing to note is that sometimes these staff can be budgeted for within activities rather than within a salaries section. But typically these roles would be the program manager, the very dedicated project accountant, any M&E officers, field officers, etc. Then we have the indirect staff. And as I explained before, these are the staff, they are still critical to the project being a success. They provide the support and operations functions, but they might not be working 100% on the project because they are also dedicated across a range of tasks and other projects. So the examples of these roles would be our country director, fundraisers, HR, IT, etc. Now, unfortunately, donors are a lot less reluctant to fund indirect staff costs, but they are critical. And so we really have to try and make sure that within our budgets, we include a contribution to these roles. Because if we don't, they're going to have to be funded out of unrestricted funds. So as staff in these roles may be working across various functions and projects, we could allocate a percentage of their costs reflecting the time and effort they will spend on the project. A note on the fact that in our draft budgets, if we do a first cut and we find it's in excess of the total that the donor has provided as a maximum, these are often some of the first cuts that we make. We start slashing the percentages of contribution to make the budget work. And whilst that might be necessary, we also just need to reflect and remember that if we are doing that, we will have to fund the costs still from unrestricted reserves. Activities, of course, will vary hugely from project to project, depending on our objectives. But these are just some general tips on how to go about calculating activity costs. We can always estimate our costs on previous activities. We should obtain quotes from suppliers and consultants. For meetings, we can estimate the number of people and then budget by person, maybe on providing refreshments, providing stationery, etc. I've just included a bullet point here on the types of meetings we might include in our budget: team planning, community engagement and sensitisation, community and team training, feedback sessions, campaign launches, campaign promotion, maybe even report writing sessions. All of those are valid activities to ensure that the project is delivered. We can include our stationery for any of those project meetings. For equipment, vehicles and assets, again, make sure the full cost is budgeted, and the full cost includes import fees if you have them and taxes. You can also eligibly charge any costs to bring the asset into use. So if you need to transport it or buy fuel to check it's working, or buy any consumables, you need to insure the asset. They are all part of the full cost of getting that asset ready for your project. And if you have new staff, they might need their new computer, they might need new phone or a replacement part or service for their computer. Again, they're critical costs and they can be included within the activities. Overheads and support costs. This is really the budget for everything else that is essential in supporting the project, kind of mops up some of the costs that we might incur that we haven't budgeted elsewhere. And this list of bullet points is a kind of aid memoir to what to think about when you're constructing the budget, but also it gives you an idea of the kind of costs that can really eligibly be charged to an overheads budget. So I've included here your utility bills, if you have a generator, your fuel and repairs that will keep the office running, office cleaning, health and safety items. Very important that your staff are working in a safe and secure environment. So costs that contribute towards that health and safety environment are eligible. Your communications costs need covering. You've got the costs of phones and the internet. Your IT, this will need servicing and repairs. And also don't overlook the insurance for all of the office and IT equipment. And in addition, you've got antivirus and software licenses that will likely need renewing on an annual basis. So make sure that you include the cost for those. On vehicles, you may need a allowance for project support, as well as the fuel that's gone into activities. And bank charges, these are often missed and end up being paid out of unrestricted reserves, but a bank account is an essential part of running the project, and bank charges can add up. And so make sure that it's clear in your overheads assumptions that these are a cost that you are likely to charge. When we want to budget for overheads in a project, it can often be difficult to decide how much to charge. And so here I've suggested a few bases for charging overheads. The key thing that I would say though is the basis needs to be clearly auditable. So some suggestions are, maybe you could take the percentage of the project income over total organisation income. If your project is 20% of the organisation's total income, then maybe 20% of your overheads seems a reasonable charge. You could do it on headcount, take the number of staff on the project over total number of staff in the organisation. You could do something more simple and designate a split between a number of projects. Say your organisation has, in this example, 5 projects on the go, and you say, actually, 2 of them are very small, 1's medium, and 2 are large. So I'll dedicate 30% to the large ones, 20 to the medium, and 10 to the smalls, and document why you've deemed them small, medium, or large due to levels of income or levels of effort, etc. Whichever of the basis you use, as I've said, make it auditable, document how you've arrived at the percentage of overhead charge. Moving on to audit costs. Now, usually there'll be a budget for the project audit, and this would be the audit that is performed by external auditors. And in reality, the donor is likely to engage the auditor, and so the actual expenditure may be outside of our control. So we just need to make sure that the contract has a clause which makes sure that any cost in excess of budget, if it's outside of our control, will be covered by the donor. You might also be able to include costs for internal audit. If you have an internal audit department, or if you have a finance department where some resource can be allocated for periodic internal audit checks, Then you could maybe include a percentage of those salaries and travel and accommodation costs if field visits are involved. Some donors may ask for internal audit staff costs to be included in salaries, but if there is an option to include them under audit costs, then consider that as well. Finally, if we're lucky, we might have a donor that allows an admin fee as part of our budget. And the admin fee is what will become a direct contribution to our unrestricted reserves, and hence we can use it freely. In some cases, donors assume or request that the admin fee counts as a contribution to head office costs, so just be aware of that also. So typically, the admin fee is calculated as a flat percentage of all other costs, and it could be around 5 to 10%. Some donors, of course, may not agree to an admin fee. It may just not be the way that they administer their funds. In this case, you need to be confident that you've covered enough support costs within other sections of the budget, like salaries and overheads, to make sure that your project is still affordable and worthwhile to you, and that all the support and infrastructure costs that will need to be funded from unrestricted reserves can be. After all the work that we put into proposals and budgets and back and forths with donors, it is very difficult to turn down a project. But occasionally, you do need to reflect and just make sure that the project will not exhaust the organisation's unrestricted reserves if there are very few contributions to support costs. Finally, on the admin fee, a little example here to remind you that admin fees are capped. So here, say we have a budget of 100,000 and our admin fee is 7%. So that means our total funds would be 107,000. Here we report our actuals and we report 120,000. Now, we're not going to get 7% of 120,000 because we've overspent, because that would be a counterintuitive incentive from the donor for us to overspend. No, in that case, the admin fee will be limited to a maximum of 7,000, but also likely reduced so that it covers the overspend. If we underspend at 80,000, again, the donor is unlikely to let us take away 7% of the full budget. Instead, we'll take 7% of what we've actually spent. And finally, don't forget to accrue the admin fee in the accounting system when you have submitted the donor report. And then when you're confident that it's earned, you can move it from an accrual to your unrestricted funds. I want to explain these two different types of contracts. The first, cost reimbursement, is more like the example I showed above and the one that you're more likely to get an admin fee on. So with this type of contract, by the end of the project, you'll have received the donor funds equal to the eligible expenditure reported. So the eligible expenditure means that the expenditure has been audited and agreed as in line with the contract. If you've spent more than the contracted amount, then your organisation is unlikely to be compensated for that overspend, and you're going to have to fund it out of unrestricted. If you have underspent, then the donor may retain funds or only reimburse you for what you have actually spent. And this can mean that if they advance the full amount to you, you could end up having to return some funds. With a fixed fee contract, by the end of the project, you will receive exactly the funds that are on the contract, as long as you have met the contractual terms. If you have spent more than that, then again, you won't be compensated and will have to pay for that from unrestricted. However, the difference is that with this type of contract, if you have underspent, then there is unlikely to be an obligation to pay back the funds or for the donor to retain those funds. And so on a fixed fee contract, instead of an admin fee, the donor is factoring in that there is enough money within that contract for you to be covering some of your support costs. So with a fixed fee contract, we might think that's great, we're getting a lump of money, we can spend it how we like. Well, of course we can't, because we have a contract in place and likely there'll be maybe milestone triggers for when we meet our objectives within the project that will release the funds. And we also need to make sure that we do still continue to book our costs properly and monitor against a budget, because we need to make sure that we're getting our full cost recovery, and we still need to make sure that an audit trail is in place for those costs incurred, because a fixed fee contract will still be audited. Regardless of what type of contract we're entering into, you need to put the budget together for the project using the real costs that you expect to incur in delivering the contract. And as I've emphasised, those real costs include the direct costs and some allocation of your overhead and support costs. This section is on transparency. And in a way, transparency is very much a backbone of a non-profit organisation. There are always stakeholders and the public who want to scrutinise how non-profit organisations spend their money and what they achieve. So in our budgeting, transparency is just as important as in all other aspects of the organisation. So within budgeting, being transparent means showing clear calculations of your costs, explaining the reasons why the costs are included, documenting your assumptions, and being clear about the type of costs you anticipate charging against a budget line, so there's no surprises for the donor. Why do we need to be transparent? Well, it will impress our donor and show that we have thought through all of our costs. It can reduce the complicated back and forths and discussions and redrafting that I'm sure we've all suffered before. When we do our budget versus actuals review, it will help us to understand where our differences have arisen. When we do our reforecasting, the base budget is our tool for forecasting for the future. And hopefully, if we're very transparent, it will lead to less queries and potential disallowances when the project is audited. So with budget templates, sometimes the donor provides one as standard, but sometimes we need to create a budget ourselves. So we're going to have a look through an example budget template together and see how it flows through. So here we have a budget template, and this is the overall summary sheet that we are working up to, having our budget in place for our salaries, our activities, our overheads, and our audit costs and our admin fee. But in fact, with a budget template, we should start at the back. So by starting at the back, I mean we should go through each of those categories and budget them and build up to our summary sheet. So let's start with our salaries. Before I run through the detail, I should say that this template is color coded, so that wherever you see this kind of peach color, that means that a manual input is required. Wherever you see gray, that means that that number is coming from a link or a formula and should not be touched. If you can get into this habit, it's really good practice for color coding your templates, because then it's really easy to pass them on to other people and explain easily which parts they need to actually enter data into. So within the salaries, I have documented the roles that I need. And I have also here documented the responsibilities and contribution that each of these roles will make to the project. That's being very transparent about the reasons why these costs are necessary. I've then put in a percentage of time that I expect these people to commit to the project. These first direct roles you'll see are at 100%, and then I have put in the percentages here that I deem relevant for the support roles. In the budget here then, the template is just calculating my year one costs by taking my salary times my percentage. That's 100%, but here, for example, you can see that's taking in 50%. And that's in my local currency, but I've also translated it into the donor currency. And I've done that using absolute reference that we've used before. So as you can see, I've taken the year one cost there in the local currency, and it's translating it at the donor rate here using an absolute reference of H1. And as a reminder, the benefit of using this absolute reference is that if I got more up-to-date news, that was now 1.11 and entered it, I can see that all my numbers change together. So for year two in my budget, I've just assumed an inflation rate of 7% here. Again, I have used an absolute reference to inflate my costs for year two. Bearing in mind the color coding that I explained earlier, you can see that actually in year three, I've entered some numbers manually rather than entirely relying on the formula-driven numbers. And let's have a look why. Well, I can see that here for year three, I've said additional 2 months budget in year three for end of project reporting and wrap up. And I've also included that extra 2 months for the finance and admin officer. That's a completely justifiable cost to add in, because often our audit goes beyond the end of the project date, and we want to make sure that our project manager and our finance officer are still there to be able to conclude and to wrap up any queries with the auditors. And I've been very transparent about that and included a good description of it in my budget. So in these numbers here, this formula might look complicated, but all I'm doing is actually taking the 12-month salary and grossing it up to 14 months salary. So now I have my salary costs budgeted, and I'm ready to move on to my activity costs. So in my activity costs, I'm using the same template again, really. I'm just changing it now for activities. And again, here, I'm documenting exactly why I want each of these costs to be funded within the project. And then again, column 1 is in peach, which means that I need to make my manual entry. And of course, I need to make my manual entry. This is where I'm doing my first calculation in year 1. Here on projector, well, I can see that that was a year 1 asset purchase. Hence, I've made sure that it's eliminated from future years. And then for all of my other costs, I have used the same principle as before, applying an inflation rate and a rate of exchange to extrapolate up to year 3 of my project. And finally, for these ones here, baseline assessment, well, that's a year 1 activity only. And my post-conference monitoring, I've added a note to say that I'm putting in double the budget in year 3 for an entire project wrap-up. That sounds perfectly justifiable, and a jump in those numbers is explained because I've been so transparent in my description. So now I have my activity costs budgeted. I should say that in my example project here, I haven't got any meetings that I've budgeted for because of the nature of the project. But for example, here on my accommodation costs, I'll just make this a little bigger so we can read it easily. On my accommodation costs, I have said that I have 10 speakers and facilitators times 5 nights per person, and I've put that in at $150 per night based on a recently used hotel. Then I've also included 10 times 2 times 100 budget for 2 staff on trips abroad. So let's have a look at the formula there. So that just translates the narrative into a formula. So I've got my 10 speakers times 5 nights per person at 150 per night. And I'm also including 2 people for 10 nights at 100 per night for the M&E and research trips abroad. So the overheads budget follows the same basic principles. I've just added in a few extra calculations, which I'll show you now. So on office rental, you'll see here that I have gone to town on justifying the percentage contribution for overheads for this project. So I've said in this case that Project Horizon is by far the largest project undertaken by Oslo, which is the name of our organisation in this example. And income represents 50% of the organisation's income. And in addition, approximately 50% of the payroll is spent in relation to this project, hence 50% office rent allocation, rental based on current rental agreement. So there I am giving a transparent justification for why I'm charging 50%. And that would be auditable by the auditors who could take our project income over total income or our project payroll costs over total payroll costs and see the approximation of the 50%. So with utilities, I have said as above 50% allocation because it makes sense that all the overheads are going to be charged at the same rate. And I've said costs include, but are not limited to water, electricity, generator fuel, cleaning, postage. I perhaps could have added, and any costs essential to the successful delivery of the project, costs relating to health and safety, environment, etc. I perhaps could have been even more forceful with my justification there. But what I want to emphasize is that you keep that description quite generic so that you're not constraining yourselves to the type of costs that can be charged there. Because if we limit ourselves and then an auditor sees something like, you know, in this case, a health and safety cost that they think wasn't budgeted for, we can raise questions. So be generic and be transparent. These overhead budgets can be difficult to quantify, to know how much to put in budget because there's so many moving parts. So to help myself, I've done a calculation below here on my utilities bill. Again, I've been as transparent as I can, and I've listed out here as much as I can remember that I need to include in this utilities contribution. So I've got my last available quarterly water bill, and I've said ×4 because I'm calculating an annual budget. I've got my last available monthly electricity bill, 25 litres per month fuel for the generator. I've got internet, I've got a post box rate, I've got office cleaning, IT equipment, postage, and then finally I have got a contingency in there for repairs, improvements and health and safety. And so I have then added in the allocations for each of these at 50%. I've put in 100% there for IT, and that's because I've obviously calculated this as a specific budget for people who are 100% dedicated to the project. And so I've come up with an overall utilities bill. I should say I'm using the word utilities quite generically, as often we need to split out between utilities, communications, maybe IT separately. But the more that we can actually aggregate things into an overheads budget, really the better, because then we're not wasting time putting things against one line and then reallocating it and monitoring quite small budget lines. If we can have a general pot, it's really to our advantage. On motor vehicle fuel, I've just done a little calculator here. I've estimated number of trips per week, weeks on the project, average kilometres per trip. I've managed to find out the fuel consumption rate for our vehicle, our current fuel price per litre, and so this calculates my estimate for fuel for the project for the year. And then on vehicle repairs and maintenance, my assumption here is that the project will use one of the organisation's 2 vehicles, i.e. 50% of the fleet. And year 1 includes a one-off set of tyres that are necessary for the vehicle safety. And so my repairs bill I've put in here, so I've got that one-off set of new tyres. And then I have got some other costs, which must be the 50% of annual certificate of fitness, track and trace, insurance, and a lump sum for repairs based on prior year costs. So now those mini calculations are linked into my budget. So for example, here, 4680 equals D23. So I've just linked that in from my fuel estimate calculation there. And the same applies to my utilities, which is coming from F37, which is the calculation below here, and D47, which is also the calculation below here. In year 2 on my vehicle repairs and maintenance, I have made a manual adjustment rather than just let the formula drive through. And because I've made a manual adjustment, I've highlighted it in peach. And I've made a note there saying that this formula is amended to exclude the budget for tyres in year 2. Because if I'd taken the year 1 budget and just let the formulas inflate it, then it would have also been inflating the 550 for tyres, which I know I don't need in year 2 and year 3. So now I have a sheet called Budget Assumptions. And in this sheet, I've just summarised all of my rationale for each line of expenditure. And it's sometimes a specific sheet that is requested by donors. So in this, I explain that my inflation rate is based on my best current estimate, based on an average of the last 5 years inflation. And this is where I've actually entered my inflation rates. And if I change them here, they will automatically update within the whole template. My rates of exchange, likewise, I have put them in here, and it's here that I would change them if I wanted to update them throughout the whole template. Here's the key that I explained to you, that throughout this template, cells of this colour indicate there's manual input, and cells of this grey colour indicate that there's already a link or a formula and you don't need to touch them. And so you don't need to touch these ones because we've already documented the reasons in the other sheets, and you can see that all this is doing is just pulling those explanations through. So that one is coming from salaries, D7, and then all my salaries are there. And then if I look in my activities, you can see that they are coming from the activities sheet. And in my overheads, these are coming from the overhead sheet. So it's only 2 more items that I needed to manually enter here, which is my external audit fee. And I've said, based on a previous project of similar size, audit fee increased for inflation, interim audit mid-year 2 and end of project audit in year 3. So that's when I'd be putting my audit costs in. And then I've put in a description for my admin fee. And I've said, this is a contribution to USLO. Unrestricted funds are necessary to support business development, fundraising, recruitment, essential organisational administrative positions that are not fully funded by projects and serve as a contingency for unexpected events. So that's where I need to persuade the donor that you need to give me this admin fee in order to fund the whole organisation. Now let's have a look at the overall budget. Here we go. And so we can see that all of these numbers in grey are being brought in automatically from the budgets that we've already done on the supporting worksheets. The only one that I've needed to add here manually is my external audit fee. And I've put in my amount here for the interim audit that I mentioned in my budget assumptions. And then here I have added in the amount for my end of project audit. And now I have my complete budget. So I can see that for the full 3-year project, the amount that I'm going to be requesting from the donor is 609,000. And that's great because I was working to a donor cap of 610,000. The advantage of having invested some time creating a really good template that's linked and has clear assumptions is that now if we do need to change something, we can do that very quickly and see how it flows through the template. So for example, if our cap had in fact been 600,000 and now we're 10,000 over budget, we can go back and start looking and critically assess what we would need to reduce. So for example, let's say in this case that we start having a look at salaries, and in fact, you know, reluctantly we say, in fact, I think the country director is not going to have 15% of their time to invest on the project. So we can reduce them down to say 10%. And likewise, our procurement officer, actually another project's just come in. We know that they're going to be having some time allocated there. So we're able to say reduce them to 35%. And now let's have a look at the impact on our total budget. Great, we've already gone under, so now we can perhaps look for an additional cost, etc. So I've reinstated this back to 610,000 as that's what my donor said the cap was. I want to show you this budget subtotal sheet because this is an important control sheet and a reconciliation sheet. So all I've done here is taken in the summary by subtotals by each year and between donor and local currency. And these are all entirely formula driven again. So in this one, I'm summing up budget E7 to E13. And if I look back on my budget, E7 to E13 was up here in my salaries, E7 to E13. Oh, whoops, E7 to E13, there we go. And so I can see here that the sum was 51525. And if I look at my subtotals, that's what's carried through 51525. So here I am marrying all of these subtotals together. And I've also done this because I just wanted to have a look at the overall percentage allocation of my costs. So when I send this to the donor, I'm requesting 35% of the funds for salaries, 48% for activities, 9% for overheads, 2% audit costs, and 7% admin fees. You know, that seems quite reasonable. Now, what I've done here is I've also brought in the totals, but I've brought them in this time from the supporting worksheet. So this time, this number 51525 has come in from the salaries sheet G15. Let's have a quick look at that. G15 51525. And remember that here it was coming in from the budget sheet. And the reason I've done this is just as a confidence check. that everything in the template is working right and pulling through correctly. Because if I'm pulling the numbers kind of from two sources and the difference is 0, then I'm happy that the template is working as it's supposed to. So I have my budget, and then the final output from this template is that now I can bring that budget forwards, and I'm ready to use it as a reporting template. So I have my year 1 budget brought through here, and I'm ready to put in my actuals and calculate my remaining budget, my percentage spend, etc., and use this as the reporting template for budget versus actuals. So some key takeaways on that budget template: start at the back, use a different worksheet for each category of expenditure, show your calculations for costs and assumptions, document your rationale, link the numbers through to the summary page, and include reconciliation checks to make sure that those numbers keep linking through correctly and are complete. Now, it may seem that I've rushed through that budget template, but you are free to use that template, and you can take your time to work through it, work through the links, and understand it. In the previous example, we created our own budget template, but sometimes the donor provides one for you. And if they do, these are the steps to follow. So work through it first without any numbers in, just to make sure that you understand how all the links work and how the numbers will feed through once you do put them in. And again, have a look and see if it does work from back to front, like the one we did in the example that we created for ourselves. We've talked about hidden sheets before, and bear in mind that there might be hidden sheets that are doing calculations in the background. If they are hidden, the donor has probably hidden them for a reason, so you don't need to touch them, and don't touch the calculations within them. You might come across cells that are locked, which means that you can't freely enter into them. And again, the donor has likely done that for a reason, to make their template work. So don't try and amend them. Now, sometimes there are errors in a donor template. So if something is puzzling you and you think you've checked and checked and it still seems wrong to you, then do approach your donor and just check. They're human too. They might make a mistake in a formula or a link or something. And once you've completed the donor template, make sure that you do a reconciliation check. Remember, in the template that we created for ourselves, we brought in the numbers from 2 different parts of the template just to check that it was complete and reconciled. So just do the same with the donor template. Make sure that you're happy that all the numbers are complete and feeding through and appearing in the final summary budget as you would expect. Then I just wanted to touch on additional budget metrics, because we've been dealing with the kind of purely financial part of the budgeting, but a donor might ask for some more indicators like cost per beneficiary. They might ask you to demonstrate value for money principles. They might ask you to document milestones. And they might ask you to show the percentage of funds being spent within each category of expenditure. And that was something that we included in our own template on the summary sheet. Remember when we showed that we had something like 30% of staff costs, 45% activities, etc. So some of those metrics may also be automatically calculated by the donor template format, but some of them you might need to do yourself. And value for money is increasingly important for donors, and often they might have certain percentages or colour indicators that need to be met. And sometimes to make those work, it means you might have to keep working through and slightly adjusting your budget until you can make those donor VFM principles and the spreadsheet work. we're going to move on now to forecasting. And in our financial reporting to donors, yes, we do our budget versus actuals, but we're also often required to forecast out to see how we think we'll end up by the end of the project. And the forecasting can serve several purposes. Obviously, it helps us and the donor check that we will end up within our budget and not overspend. It also helps us determine that there might be unders and overs in certain categories, and we might need to ask for a formal amendment to the allocations of the money through a contract amendment. So how do we forecast? Well, this guidance and this example that we're going to do here assumes that we've already done our budget versus actuals at a certain period. And then from there, we're going to extrapolate and see how far forward we can forecast. So we're going to do an example and we're going to follow the basic principles here. We're going to add columns month by month or maybe quarter by quarter, just depending on how far you're forecasting out. We are going to check for any invoices that have come in since the actuals or that are anticipated that we know of, and then we can add these into our forecast because we're fairly certain of those costs. Then we have the items that have steady patterns of expenditure like salaries and rents. And for those, history is a fairly good guidance for what the future will be on those. So we can use that information to forecast them out. And the most tricky bit to forecast is going to be the activities, because that is going to be very dependent on what we have achieved to date and what we have planned. And activities are also the area where we may have faced obstacles, we may have faced delays. So our initial plan for the timing of activities expenditure may need reworking. And so we do need to make sure on forecasting that we work with our team who are in the field so that they can give us good information so that we have a comprehensive view of the timing of expenditure of the activities. So when we do our forecasting, we might discover that it looks like we're perhaps going to be overspent or underspent in some of the categories. So I just want to look at a few ideas here so that we can bear this in mind when we run through our example. So let's start with salaries. If they're over budget, what can we do? Well, let's try and think about, is any recruitment planned? And if so, is it planned from day one? Is it really going to be planned and executed from day one, that recruitment? Or could we shorten from, say, 12 months for a year to 9 months, assuming that they perhaps start a little bit later on the project? And likewise, at the end of a project, we may have field staff who finish 3 months earlier than the administrative staff who are doing the final wrap up and reporting. So look closely at whether the months allocated for staff are realistic or whether a saving can be made there. If we're under budget, well, have we accrued any costs for staff that might work beyond the project date? Because in reality, our project might end on the 31st of December, but it's likely that reporting to the donor, we still have an extra month for, and then we may have an end of project audit. And so in reality, you might need your key accountant and your key project manager to stay on another 3 months or so. So don't be shy about making that transparent and accruing the cost for them to use up budget. Another reason for being under budget could be that there were gaps in employment if somebody left and somebody else joined. And whilst they were not in their role, say the HR person or the logistics officer, was somebody else doing those tasks and responsibilities? And if so, Could we allocate a bit of that other staff member's time? If that was the case, be transparent, document that, list out the responsibilities that the other person was undertaking, put it on their personnel file, and then we can charge a bit of their time to our project. Did we need more effort or time from support staff? Remember in our working example in our budget versus actual reviews, for example, we had HR staff putting in more effort at the beginning of the project when they were doing all the recruitment and contracting. So perhaps that's when we could allocate a bit more time from our HR team. And finally, have we charged total costs? Remember the salary calculator that we've looked at? Have we charged everything, including all the allowances, the insurances, etc.? Were there any exam fees, team building events, where we think actually these were an essential part of the staff members' performance and execution on this project, and so we could charge those if we had some budget remaining. On vehicles and fuel, if we're overspent, well, let's critically review the use of the vehicle. Was it all used by our project? Was there maybe another project using it from time to time that could contribute to the costs, that could pay some of the fuel, that could perhaps pay for repairs, etc.? And also, if we're over budget, we could also look at our assumptions based on our number of trips and our mileage, our kilometres per trip. And maybe we realise that actually we need to reduce those assumptions down a little bit to bring the budgeted amount down. If we're underspent, well, then have we got any servicing or repairs that we've been putting off that now we've got the budget available that we should get it done to make sure that the vehicle is up to scratch and safe for our staff? Do we need up-to-date safety equipment and up-to-date tools to be able to use the car or the vehicle effectively? Have we made it clear that in the case of our vehicle not being available or needing extra logistics in certain phases of the project, that it's okay to spend some of that budget on vehicle hire? And if we had a repair budget that wasn't used, well, can we reallocate it elsewhere? Perhaps we just, we got lucky, our car worked perfectly well for the year, and all allocated repairs are just simply not needed, and we just have to be transparent in our forecasts and say, actually, we're going to reallocate that to fuel, or we're going to reallocate that to overheads or activities, etc. If we're over budget on office costs, well, let's just have a quick review again to check that there's no costs there that are quite flexible, that we can move to other categories, like stationery, for example. Is it really an office cost, or is there an activity that we should have allocated it to? Is there fuel that was perhaps put in office costs, assuming it was for a generator, when really it was vehicle fuel and could be moved to vehicles or activities, etc. If we're under budget, then we can look at things like making sure that we purchase some stocks in advance so that we've got them ready for the next period of the project. Have we got room in the budget for any office improvements that we've perhaps been delaying, like new locks for the doors or something like that to physically secure the assets of the organisation? Are there any IT upgrades that we desperately need that we just haven't had adequate budget for, and we can take the opportunity to use a little of the underspend here for that? On activities, if we're doing our forecasting and we're concerned we're going to be overspent, well, Can we talk to another project and see if there's any events that we can share if we've got the same beneficiaries or the same community that we want to work with? Because then we can share the costs of the refreshments, the logistics, etc. If we're underspent on activities, well, this is where we need to spring into action and think about an additional activity or service that we can provide. Is there extra training that we can provide, extra equipment, or do we need to defer that saved money to the next phase of the budget so that we can plan a new activity more comprehensively? So they are just some ideas to think about when you're doing your forecasting. We need to stick with the principles of being transparent and being fair. If there is too much loading of costs in the last months, your donor may have questions about why there was so much expenditure right at the end of the project. So be transparent and fair and make sure that we're not just spending for spending's sake and that we're still adding value from our final month's expenditure. So now we're going to do a practical example of a reforecast and a reallocation, but we'll do that in a separate video.